Hey guys, so I'm going to be talking about supply and demand and how I use them to trade, as I've been trading using them for a while now. So I'm going to just explain two of the trades that I've taken out of probably five supply and demand trades. So just you guys just get the hang of it and how I look at the markets. So let's get right into it. So let's look at this blue line here. This was one of the trades that I've taken using supply and demand as well. And I profited around 18 pips from this. But if I held it, it could have went longer, but I was just in for a scalp. So let's see here. So this was where the trade was taken. As you can see, 1940, and I closed it out at 19.38. So this area, this was a supply. As you can see, there has been a level of support here previously. There has been a level of support here on the 30-minute, and this was the break of this candle to the downside. That indicates there has been an imbalance, which means the supply is more than the demand, which has also created a fresh supply. If you know about supply and demand, you would know what I'm trying to say. So this was a level of support, and then this 6:30 candle just broke it, and this candle was just pre-London candle, which means the volume kicking in, and volume for pre-London kicked in, and it just went down bearish right up until this level of price. Now, price stalled here for a bit, and this was before the New York session. So London traded down right all the way to a level of support. And if you look in the level of support, this was a break and retest chart pattern. It was a break up here, and price retraced down and retested and then hitting back up. So when I got on the charts, I saw this move, and I was trading, particularly from 8 to 11 p.m. during the NY session only, and I start to realize that there has been a level of support form here. Okay, there has been a level of support form here, and candles are starting to close right above the support and slowly starting to show some sort of a bullish confluence. So I was thinking, okay, it only makes sense to get in and buy because there has been a level of imbalance here. So price should, with momentum, price should head back to this zone, right? And that is what I did. Price headed back to the zone, and I did not get my buys in, but I wanted to get a level of good level of sell here. So I waited for price to head up right until the supply, and as you know, fresh retest, the first retest on a fresh supply will always pull back. Majority of the time, it always pulls back, and especially the trend is in downtrend, so gold has to follow the trend and pull back, and that's what I did. Price headed up and just closed right below this level of price, 1940, and I just got in a sell. There was a quick sell at 1940 level, and I had my stops about roughly less than 15 pips around there, and I closed it for 18 pips. Now I could have held it if you look in the, so on the 15 minutes, as you can see, it was bullish, and bullish candle, and this last bullish candle was just a nice retest of this supply. Just a nice retest of this supply and leaving a top wick, which means that is so-called an exhaustion wick or rejection wick at the supply zone, indicating that there's going to be possible reversal. And it happens. This is common bread and butter of supply demand. And I had my sell here, and I took my stops here, and just write it down. I could have held it all the way, but I wasn't feeling to hold the trade longer because I've already had previously a good trade on buy for gold just few minutes before this trade. So I was just happy to take 18 pips straight. So I closed it here, and price eventually headed back down. So now for you guys traders out there, a setup like this would really pay you off real well. Like the pips it gives you is crazy. It's a lot, right? So that was one of the trade. Pre-London breakout and New York session retest the supply, and market follows the long-term trend, which is bearish for gold, and New York session traders just dump in their sell orders. So that's done. So for the second trade, I'm going to show you guys a trade that I took a sell on gold, and I closed it for about 35 pips or so. And this was also based on supply and demand. Now, price was in a downtrend for some time until price reached this level. So always before you trade, assuming you trade the New York session, always have a quick look on how the London and Asian played out. So you mark your key levels, right? So when I got in the market around New York session, I was looking at previous price. So it seems that price actually bounced off from this area and headed up for about 90 pips. So why the bounce? So I put my support here because this was a fresh support, and I tried to go on the higher time frame. And I realized that at this level on the past, during month of 7, 10th of July, there was also a level of support here. And now once price has created a support, it traded all the way further from it. And now it is back to this level. So when price retests a fresh support or a demand after some time, it is definitely going to react or so. And that is what happened. Price came down, tested 1914 support level and headed up. And notice that this touch of support was during midnight. So there's going to be less momentum or volume in the market during midnight, and price is not going to break that. So traders come in the market thinking, okay, we are a good level of support. Let's just consolidate, and that's what it did. It consolidated during the Asian, it consolidated during the London, and London was just heading up. But notice how price was kept in this minor trend line. It was always just in a upwards ranging until we reached a certain level. So now when I came in the market, I plotted my supply and demand. So notice how price rejected from here. So where is price going to go? Price is probably going to head up to the next zone. So where is the next zone? You can see you have a level of resistance here. You have a level of resistance here, but you also have a level of breakout here. Look, it was a support level here. It was a support, and there was a bearish candle just closing strong, indicating a level of breakout, and that is from a very strong zone. Always mark your breakout candle if you're trading supply and demand. Breakout candle, new supply, right? So when I had this marked, I was aware that, okay, there is possibility of price rejecting from this level. And as you know, the trend is bearish, so it wouldn't make sense for gold to just head upwards. And look what it did. It came up. If you drop on the minute 5, you could see this. Right, if you drop on the minute 5, you could see this pushed up, just left its entire wick. So this was a very strong level, and banks and institutions were just targeting on this level. As soon as price touched here, those orders were activated and price just pulled back hard. And this was also because of there was also a news event, but news event, technicals, fundamentals lines up with technicals, and it all makes sense. So I actually held my trade for a bit. So I had the news event came out, the numbers were negative for gold, and the numbers were negative for US dollar, and it was positive for gold. So gold shot up right up until this level of supply. And look, just premium price. This is called premium price. As a trader, you have to look for premium price levels. And I got in my sell here. I had a decent stop of 20 pips. In case, trading is a game of probability. So in case price reverse against me, I'm all right with hitting 20 pips stop loss, nothing more than that. So when price did. So I closed out at close to 36 pips, but look what price did. Price eventually hit 160 pips. But I was happy with my trade because previously I had a couple of wins, so I was happy. Right. So I hope you guys took some notes on this, and I'm just trying to do more supply and demand for these days, and we'll see how it goes. But yeah, stay sharp, and plot your key levels all the time and look back at your Asian and London session before you trade. You know, if you're trading in London, look how the previous Asian and the previous New York session played out. If you're trading the Asian, look how London and New York session played out. So these are a couple of things that you have to keep in track when you're trading. So that's it for this video. I'll update you guys on the account challenge most probably for this week, or probably next week I'll release a video. And all right, peace out.